Welcome to the March quarterly update for the Conscious Investment Management Impact Fund. This quarter, I'm filming this video following a week-long roadshow and have lost my voice a little bit. The fund finished the quarter with approximately $170 million in net asset value. Consistent with its aims of creating positive impact while protecting returns and generating income, the majority of the fund's assets relate to social housing and specialist disability accommodation. The remainder of the fund's capital is allocated to distributed solar, natural capital, social impact bonds and cash. The fund returned 0.7% net over the quarter, with returns since inception of just under 5%, prior to any investor-specific fee rebates that you might receive. There's no debate that the last 18 months have been a challenging environment for real assets and property funds. The run-up in interest rates and declining investment volumes has meant we've seen cap rates and discount rates increase across the areas we invest. This has been demonstrated by the fund's outperformance of comparable property benchmarks, which are detailed in the written quarterly report that you've received. As we have previously communicated, we're pleased to have protected investor returns during the run-up in interest rates and significantly impacted valuations in the assets we invest. This was achieved by positioning the fund defensively, such as focusing on the lowest risk assets that we do, and deliberately using very low leverage of around 7% versus a 30% target in the IM. As rates normalise, we do anticipate that fund returns will move into its target range of above 7%. The entire investment team at Conscious Invest is focused on reweighting the fund towards its long-term target portfolio construction. During the quarter, the fund made a new large-scale investment in a specialist disability accommodation operating portfolio. The total portfolio size is around $40 million, and this investment will see the fund finance over 40 new disability accommodation homes, which is a core strategy for the fund. Importantly though, it'll lift the fund into its target weight for specialist disability accommodation, a higher returning strategy. This portfolio of homes is operating and is already managed by the fund's impact partner. We expect it to complete and settle by the 30th of June and be immediately accretive to fund returns without an upfront J-curve importantly. Separately, as investors will remember, the fund is also focused on expanding its sustainability investments, primarily through growth in natural capital, and we hope to announce a new investment to you in this space in the coming weeks. Given these investments, the fund will have fully deployed its cash balance and is now open to new capital inflows without restriction going forward. Please reach out if you'd like a more detailed update on the fund or have any questions on this quarter's report.